Taiwanese index is up 300 points. The Hang Seng is up 244 points.
Inflation coming down gradually toward 2% on a sometimes bumpy path.
अपने तीसरे टर्म के पहले 100 दिन का प्लान भी बना रहे हैं.
And of course, the recent low is 21,710. That should not be broken on the way down.
Investec on BSE, it has upgraded the stock to buy from hold.
So the total issue size and total funds that Vocard is looking to garner is over 570 crore.
The sensex is starting at 72,660 or so.
Starting tariff is higher because of the initial investment cost, but with the passage of time, it reduces.
The mid-caps are outperforming. The mid-cap index is up nearly 2%.
Insurance regulator has in its board meeting approved the final regulations when it comes to surrender value for life insurance companies.
We are now given to understand that privatizing one of the non-life insurers may not be the agenda anymore.
It's a good Thursday. The Nifty is up 163 points.
It indeed is a good Thursday, and markets are holding on to gains by and large. You're with us here on Closing Bell. That was the day so far. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Surbi. Nigel is joining in from the newsroom floor. Guys, hi, good afternoon.
Hi, good afternoon. You know, after seeing the 19,700 mark almost on the Nifty this week, it's good to see the Nifty at 22,000. So week to date, we're absolutely flat on the Nifty and the mid-caps. But, you know, it has covered some ground from the lows. Absolutely. And the mid-caps are rebounding.
I think, Reema, you referred to 20,700.
Yes. Yeah. What did I say?
17,000.
No, 19, I think.
No, 19,000. No, I meant...
What's going on, guys? 19, 17, 20.
21,700. Now we're back to 22,000.
All right. Well, you know, we're by and large holding on to gains. And I think that is essentially the main point here, right? 170 points or so. The only complaint, and I don't think there should be a complaint, the only, I mean, if you want to nitpick, is that after the opening levels, the earlier highs, the market is not built on further on the Nifty in terms of the gains. Now, just two levels which now the market just should not break. These are levels which we put out in the morning as well. So, we look, you know, first we need to cross the hourly averages, then you look at the daily averages. The 40 hourly average as of yesterday's close is 21,985. We're just above it as we speak. We'd comfortably taken these levels out in the morning, but we are now back around there. And the Nifty bank, the same 40 hourly, is around 46,600. Now, there we've actually come off a little bit, right? We're at about 46,653. So just about there. So these are hourly averages. Watch for the close by 3:30. Hopefully, we manage to stay above it. Now, broader markets is seeing some impressive bounce, at least the last I looked at it. So it's basically 2% gains on the Nifty mid-cap and I think 2.5% on the small-cap index. So the pain there was big, and the relief, of course, is also pronounced in terms of what we are seeing. And PSUs, once again, I mean, it's not a homogeneous space, but PSUs of all hues, color, shape, size, they're doing very well. And I think the index there, almost about 3% gains today. Reema.
Well, in the PSU basket, it's NTPC, BPCL, Power Grid, Coal India. These are all the large cap Nifty names in the PSU basket, which are higher in trade. But other than that, you are also getting support from heavyweights. Like L&T is moving well. You've got HDFC Bank, which is significantly higher. ITC, Reliance Industries. So many of these large caps, heavyweight, have come together to provide that strength. On the losing side, not too many, but Bharti Airtel, which hit its 52-week high earlier this week, has retreated over 1%. Maruti Suzuki also counts as one of the stocks. Few stocks in the red, but Maruti is one of them. But I guess it's the mid-caps and the individual moves there.
No, it absolutely is. And I mean, I don't want to be a party pooper, not nitpicking, but I completely sort of take Prashant's point, because that's been the spot of bother. You'd argue that you opened gap up, and that gap up was thanks to the Fed. And after that, what did you do? Well, practically nothing. Just from someone who's trying to make money on an intraday basis, I guess those day traders may not be as happy with today's screen. But for what it's worth, I mean, there's plenty of green. It's at least stable. It's held. It's not given way. And it gives us more evidence that perhaps the broader market is finally making its way out of the woods, and the recoveries are not getting sold into. So on the mid-cap screen, the PSU party is continuing here as well, by the way, not just large-cap PSU stocks. So look at PFC, REC, NBCC, NALCO, lots of examples for PSUs that are doing really well. Nalco obviously ties in with the other theme. Metals are very, very strong today, and that's cutting across private sector names and public sector. So you've got some big movers there. But even beyond the PSUs, lots of stocks bouncing around. Look at Muthoot, 5% higher. Thermax has been up. Then you've got some of the road construction players, IRB, NCC, pretty strong moves on these stocks coming in after quite some time. Just some more names. CDSL is doing well. And then you have the likes of an Intellect Design, 7-8% higher. Electra is high. Electra has been, one of the darlings of the mid-cap boom over the last 12 months. So we've got buyers back to many of these stocks. And perhaps that's telling us that, I don't want to say it, Nigel, but perhaps people will want to believe that the worst of the whole mid-cap sell-off, perhaps that's behind us, at least in the short term.
Well, that's going to be the hope, right? And because that's what hurt portfolios. And now you're seeing quite a few stocks pulling back. You're talking about metals. I understand that ferrochrome prices in China are rather strong, and that's what has, an impact across the globe. And that's why, in fact, we have IMFA, that's Indian Metal Ferro Alloys. That, in fact, is up in today's trading session. And for the last few sessions, the stock has gradually moved up closer on 7%. The reason I'm talking about it is some of these stocks, they corrected 20-25% when we did see that fall. So some of them are pulling back. So that's one stock. The other one is Vascon. That one is up close to around 8% as we speak. Pull up a couple of other notable movers as well. Yes, Thomas Cook, the stock got clonked. It was nearly 200 rupees, came down to around 135 rupees, and today it's pulling back. So some of these stocks that got hit very, very hard when the broader markets did correct, well, they are pulling back a little bit, though they're a distance away from what they were, say, a month or so ago. How do you position yourself, though, in the final hour of trade? Mitesh Thakkar is back with us. Mitesh, we had a good start. We're not able to build on to those gains, though. Even though we have 60 minutes to go, we're still holding on to 22,000 odd. Will you be satisfied with the move that you're seeing on the Nifty? And what are the closing levels you're looking at on the Nifty as well as the Nifty Bank to suggest that maybe we have more in store?
Good afternoon, Nigel. I think I have believed that we have more in store, for two reasons. We had a gap up. We did decline during the noon time, tried to fill the gap, which didn't happen, and then we bounced back again. And the hourly and the 2-hourly charts are now showing signs of indicators trying to come out of oversold level. The reversal hasn't happened as yet, but the early signs are there. So what I would wait for is to see if the Nifty can get past 22,050-70 zone. Then I think 22,250 could be on the cards, and therefore this pullback would extend by another 180-200 points. Similarly, on the Bank Nifty, once we see the Bank Nifty get past 46,800, 60,870 zones, then I think 47,200, and then in the best case scenario, 47,500-600 can also happen. So trading with some positive bias. National Aluminum, I think Surupi did highlight that stock could reversal over there on the intraday chart, so that's a buy. Keep a stop below levels of 143.5 and look for a target of around 155 to begin with over there. Similarly, NMDC is also coming into a buy. I'm just waiting for the signal to be fired. I would want to see the stock price get past today's high of 208.5. So buy about 209 with a stop at 205 for targets of 219.
Okay, got that, Mitesh. Thanks very much for your trades right now. We'll come back to you in about half an hour and try and get some more ideas going. By the way, just want to point out that we noticed CDSL. Also look at IIFL Securities, not IIFL Finance, but Securities. A lot of, broking / capital markets related stocks are doing pretty well today. And IIFL Securities is up about 6.5%. Must have to obviously bear in mind there was a lot of price damage on the stock when the RBI developments took place for the gold loan business of IIFL Finance. Even this stock was sold down pretty sharply. And there's a recovery that's underway today. CDSL is the other one, but there are two more. In fact, we've got Sudarshan joining in to focus on them because both BSC as well as Motilal Oswal, both these stocks have been up and about as well. And for these two, at least, it's positive brokerage commentary that seems to be powering them. Sudarshan, fill us in.
That's correct. So BSE has moved sharply higher after Investec has upgraded the stock to buy from hold, and target is rupees 2,800 per share, implying 30% upside from current levels. Investec expects company to witness strong traction in equity derivative volumes, and the option market share for the company has jumped 3 times sequentially from 4.2% December quarter to more than 15% in the March quarter. And as per estimates, it is expected to see further market share gains given rapid scale-up of BankX product. On the margin front, Investec sees an improvement in Q4 FY24 and BSE is currently trading at 24 times FY26 PE, and Investec believes it has potential to achieve 45 to 50% EPS CAGR over FY24-26. Next is Motilal Oswal Finance. MK has initiated coverage with buy rating and target is rupees 2,000 per share, implying upside of nearly 25% from current levels. MK believes company is a perfect vehicle to ride India's wealth, and its two major segments, assets and wealth management, are well propped to deliver superior growth. FY23-26 operating profit CAGR is seen at 25%, and 70% of company's net worth is in equity and MF treasury assets, which is seen as an added safety margin to valuations of core operating businesses of Motilal Oswal Finance.
Okay, got that, Sudarshan. Thanks very much. Now, the reason why these calls really stand out is that they're coming on these stocks after what has already been a humongous rally. BSE in the last 1 year is up 400%. Pull up a one-year chart on BSE, and that's Motilal Oswal. That's also up nearly 200%. That's BSE. That's today's move, 10.5% higher. Pull up a 1 year now, and you will see that 400% rally that's already happened. And on Motilal Oswal, the rally is close to 190%, a 12-month rally. So then what should one be doing? Is there literally more upside despite this huge run-up? Well, let's ask our first guest on the show. We have Deven Choksi joining in. Deven, always a pleasure having you on. So the market is absolutely in love with anything that's linked to the capital market, right? Because we've had a roaring bull market. But tell us, do any of these stocks, some of your peer brokers which are listed, or even some of the stock exchanges, do you say that there's still some value? Can they still be bought now? Or is the story over?
Yes, Sirvi. Good afternoon. Well, on one side, we have got about 40 lakhs new demat account opened every month, which is giving us a run rate of around 5 crore per annum. On existing base of around 14.5 crore or 15 crore, I think we are talking about additional 5 crore account, I think, every single year. So, which is basically, I think, driving this entire, stock rally of these listed companies. In my viewpoint, I think we are yet to see, significantly large number of participation in capital market with the products. And that's where probably, I think, the argument on the directional call for either the depository business or the exchange business per se, I believe that I think they are relatively remaining in a very strong situation at this point of time. At the same time, I think these businesses have practically, I think, no competition in a way, if you want to see it that way. Because among those listed players have already cornered some part of the market share. So frankly speaking, even though theoretically some exchange businesses can get listed, but honestly, I think they will not be able to offer the competition to this single business. So that is where we are seeing the premium valuation also at the same time in these businesses. Coming to the question of, I think, should one retain? Answer should be yes. I think it should be hold in the portfolio stocks. And any correction in the stock price in a meaningful period, if it all comes, I think it is giving an opportunity to buy them into a portfolio with a directional call of next few many years.
Deven, afternoon. What about the stock like RateGain? Is that a stock that you've analyzed? It's up 4.5% today. In the last 1 year, the stock has seen a rally of close to about 130%. This is a company which provides these SaaS products to travel and tourism. So it's been a big beneficiary of this upswing we've seen in travel and tourism and hospitality. Recently, just today, the company announced an order win with a US railroad company called Brightline. And the company's guidance, they've been upping it for 3 consecutive quarters in a row. They started the year with a 55% revenue guidance. They upped it to 65%. And then, in January, when they reported the December quarter numbers, they're talking about a 69% top line growth, aided, of course, by acquisitions. Is RateGain a stock that you've analyzed in the past?
So, Nima, we don't have the coverage on this particular company, but in general, I think we have been seeing the kind of news flows coming into this business. And we believe that I think overall the opportunity basket will remain big, for this kind of companies who have been in the business of providing the services in the entire tourism sector, traveling sector. So from that perspective, yes, I think one could possibly, look at this company a little bit more in detail. At this point in time, since we don't have coverage, we won't be able to offer specific comments per se on the company.
Okay, got that. Stay on, Devin. We'll have some more questions for you. Let's also focus on one of the other buzzing mid-caps today, IRB Infra. As we just told you, it's up about 7-8%. Now, the stock has gotten an upgrade from Kotak Institutional Equities. Vivek is joining in. So, Vivek, what's Kotak saying? What do they like about IRB now at these prices?
Well, what's actually happened is that on March 14th, IRB Infra informed the exchanges that there had been a secondary deal transaction that had taken place as far as the private InvIT was concerned. Now, Sintra, a ferrovial company, had gone ahead and purchased a 24% stake from GIC's affiliates in the private InvIT. Now, what this led to was a value discovery process as far as IRB's own 51% stake in the private InvIT was concerned. So, Kotak, went and met the management in the analyst meet, and what they're saying is that post this, they're going ahead and valuing IRB's stake in the private InvIT at 34 rupees a share. So what has Kotak done? They've, number one, upgraded the stock to an add from sell. They've raised the target to 65 from 60. They are saying that the total value of the transaction, which was close to 6,600 crore, they are saying that transaction values the InvIT at 40,700 crore, thereby making IRB stake of 51% worth almost 20,400 crore, which is how they've gone ahead and derived the 34 rupees a share valuation. Along with that, they are also quite positive as far as road sector award tendering is concerned from NHAI. They are saying that NHAI is now moving away from HAM project awarding to BOT and TOT models, which is the build, order, transfer model. And they believe that this plays well into the hands of IRB Infra, given the fact that the company, when you're comparing it to its peers, has a much stronger balance sheet. On the back of that, they've gone ahead and upgraded the stock, and they remain quite positive.
Okay, all right, Vivek. Thanks a lot for that. Deven, what do you make of it? IRB Infra zooming away today.
Yeah, well, I think in general, we are seeing the mid-caps counters have steadied today, and I think they have actually participated well into the market. I do agree with the commentary which has come up, and I believe that I think amount of new contracts which are coming up on the road side from NHAI, I guess I think this company is very well positioned also from the point of view, as rightly mentioned, from the balance sheet point of view. So I guess I think the visibility of business remains absolutely strong in this kind of an activity. Though we haven't done the sum of the part calculation on the InvIT side. So I would refrain from putting a comment there. But I believe in general, the business remains, I think, absolutely strong given the order flow is coming into the sector.
Okay, we'll take a quick commercial break here. We'll come back. Markets, though, are holding on with a 190-point gain. So a little better than when we started at 230, but broadly that same zone. Take that break, our first on the program, but we're coming back with more on the other side. Stay with us.
Welcome back. You're watching Closing Bell. One of the other important stories of the day is the key decisions that the insurance regulator IRDAI has likely approved in its board meeting, which was scheduled today. Yash joins in with the details on that. Yash.
Well, Mangalam, the Insurance Regulators Board met very recently, and this board meeting was particularly very crucial and important for that one agenda point which was to be discussed and an approval was expected. That was around the surrender value which is paid by life insurance companies to the policyholders in case of an early withdrawal of the policy. What we've picked up from our sources is is that the insurance regulator has approved the surrender value regulations for life insurance companies. Of course, a proposal on this one was released by the regulator in December 2023. That proposal spoke about increasing the surrender value by as much as 2 times to what it is today. And if that proposal would have come in the form that it was proposed, then insurance companies would have been able to retain just 57%, just 17% of the premium which they collect from policyholders as compared to 57% which they retain in surrender charges today. Now, what we've been given to understand is that insurance companies had put forth their suggestions on surrender value. That was incorporated by the regulator, and certain changes in favor of life insurance companies have been approved as a part of the final regulations on surrender value. Not just that, the final regulations of surrender value are expected to be released by the regulator by as soon as early next week. What had the insurance companies suggested? One was, put surrender value depending on the duration of the surrender of the policy. So if a policy surrender, is a longer duration, then the policyholder could be eligible for a higher surrender value. But for early surrenders, the policyholders could only get lower or no surrender value. That was the proposal which was put forth by life insurance companies. We need to see what comes as a part of the final regulations on this very important topic of surrender value.
Okay, all right, Yash, got that. But I guess as you've been telling us, probably the final regulations will not be as harsh as originally the industry was fearing. Devin, what is your take on life insurance? I mean, it's pretty volatile and subject to a lot of changes in regulation, taxation, etc. But how do you find present valuations, and which are the stocks that you would perhaps pick?
So I think till the time we get the complete clarity on surrender value, I would like to keep the status quo on that particular aspect. But having understood the subject, I believe that I think the saving component into the life insurance policy is being argued to be given back to the customer. That is what I think is being argued. And should that be the situation, then I think there should not be material impact onto the balance sheet of any of the life insurance company. But if I think the term insurance part of the insurance policy is going to be, I think, retained by the insurance company to an extent, I think that would probably help. But I guess I think till the time we get the complete clarity on this particular aspect, one need not, I think, get into the exercise of finding out what could be the impact coming onto this. Yes, I do agree that I think there are policy changes which are happening, and as a result of which, many of the insurance companies are required to be relooked at it. I believe that I think overall the growth program for the insurance companies, I think, do not get altered. They would continue to grow, in my viewpoint, I think between 18 to 20% kind of a new business premium. And that's where probably I think some of the companies well-placed are SBI Life Insurance, among others, along with LIC. I believe that I think the distribution reach probably gives them good amount of lever to grow this business in a systematic manner.
Devin, we leave it there. Thank you very much for your time. It's a pleasure having you with us here on CNBC. Well, Dinshaw Irani is now joining us. He's CEO at Helios Mutual Fund. Dinshaw, great to have you with us here as always on the program. Appreciate your time. The basic question before we get into what you like and don't like and what you've been doing is what people, I think most want to know is this period of volatility backs kind of behind? We may not go back to that up and up boom kind of a market, but are the big swings behind, or should we expect more? I mean, this is not done yet. Your thoughts, Dinshaw?
Good afternoon, Prashant, and a very good afternoon to you, your viewers and the team at CNBC. So, Prashant, basically our call is that this year itself, forget about the present times, I think this year itself is going to be very volatile. It's going to be a very choppy time period. And if I was to go chronologically, I think it'll start off with probably the quarterly numbers. The March quarter numbers, I don't think are going to be that great. Our feel is they'll be fairly disappointing. I mean, we talked to quite a few companies and industries and stuff, and you can see that palpable weakness in demand in the markets as such. So it's obvious that the numbers are not going to be that great. In fact, if you remember, even the December numbers, they were mainly driven by the margin expansion rather than from top line. The top line has been coming up. Top line growth, in fact, was a very low single digit, if I remember, for the December numbers. So March is going to be a disappointment. In fact, it'll be the first quarter after probably 6 consecutive quarters of earnings growth that you'll see some cut in earnings going into the March quarter as such. And if things don't improve, at least on the rural front, that may continue even in the June quarter. So you're talking about 2 consecutive bad. So that's one reason why we expect that choppiness to continue. The second one is obviously elections. I mean, they play a lot role in the markets are fairly volatile around that time. The budget is going to be very transformatory. That's what I've transitionary, I believe so. But still, I mean, there'll be a lot of rumors flying around at a point in time. It will create some amount of choppiness. And the fourth one, is obviously the interest. Saw the speech of the FOMC, the Fed chair yesterday, rather this morning. It was not to cut rates, in the sense that it is hard to believe that havoc there. It's been 25 months that the unemployment rate has remained persistent, and that obviously scares him a bit. So it's obvious that it won't happen. Reasons will work towards the market not doing too well. All the positive points are already built in, so we expect a fair bit of choppiness. I'm not saying that the markets are going to correct. Maybe there's a time correction. Fact is, it's going to be not a straight line correction. It's going to be a choppy correction going ahead.
All right. Hi, Dinshaw. So we got that. A bit of choppiness is what we could be in store. Brace ourselves. But how are you all positioned then? I think on tech, you all were not too positive. I think you all were a little bit negative on that. So that was a few months ago. So how is that stance now? And from the auto space, I think you all prefer the auto ancillary. Fill us in with what you like.
So Nigel, actually you're right. I mean, the tech space, we were negative. We continue to be negative. We haven't changed our stance. I think still there's a bit of froth lying in that particular sector as such. So we expect that to come off. And if I'm talking about, I mean, the best case scenario or rather the base case scenario for US being a soft landing, then that sector has to suffer first before that happens. And in fact, if there's a recession being built in, there's a problem going forward. So that's one area. Autos, we've not been positive for a while, frankly, because of one thing that we always believe in is you need to have your themes which are sans of any disruption. And the disruption in auto is the EVs, and we don't expect that to go away. In fact, now we're talking about hydrogen playing havoc with the ICE space. So it's obvious that there'll be a lot of choppiness in that sector too. So it's better to avoid that sector as of now. So these are the two reasons. And you asked us how we're playing this. Frankly, I mean, that was the sole reason for us to bring out a balanced advantage fund. In fact, we closed it yesterday as such. And our call is that the investors should be looking at options where they have where a fund can offer them low volatility, cut down on the downside, and partake if the market starts moving on the upside. So it's going to be very well managed fund that we're looking at in that space. So that's the reason why we brought up that.
Okay, got that. Then hi, afternoon. Just wondering, did you buy any PSUs in the fall at all?
Yeah, so afternoon. So we keep doing that. So what we've done, I won't say the names, but we look at opportunities when this fall did happen. So basically, what we proactively did was we moved out from some of the mid caps and small caps, and we did tank up on a few large caps. Some of the PSUs happened to be in the large cap, so we did tank up there. And by the way, there were some PSUs in the mid cap space also, which we did add up on. So we remain with the fundamentally sound stories as such, where growth is quite visible. So that is what we'll be playing with in this time.
No, but give us some more clues, right? Because PSUs is a wide universe. PSU large caps meaning oil marketing companies. Do you mean Coal India? I mean, it's a wide universe. Then you have power utilities. There are lots of them. So which ones do you think are safe, have decent value, and one can still be sort of betting on?
So, okay, so you mentioned one of them, the oil marketing companies. We did add up to those. We added up to some of the banks that we own. And the call here is that if the budget is going to be a earth-shaking one, it has to have some amount of PSU divestments built in. And I think that's the one that we are playing with, the scenario that we're playing with, because if there's going to be a lot of capexes on, say, infra and on capexes going forward, it obviously has to be funded through something, right? And if you're going to keep your borrowings at a limit, the only other way is probably divestment in PSUs. So I think that's a call that we've taken here, and that's why we're playing that going forward.
What about defense, railways? They corrected quite a bit. They were down 20-30% from their peak levels. Did any of the names there make it to your buy list?
No, unfortunately not. So, no.
Had they fallen a little bit more, would you have considered it, or do you think it's completely out of whack? Even if it falls, some more, it's still not, attractive enough for you.
So basically, the railway stocks, I think too much was done there. I don't think we'll be excited even if they fall a bit more as such. But within railways, there's one particular stock which is more of tourism related, right? So that's the one which we picked up, I think. So I won't take the name, but you can very well guess what I'm talking about. So that was the one which we picked up, and that's because we are very gung-ho on domestic tourism. So that's what we felt, that this was a stock that got beaten up just because it had a railway name in it, but it was actually to do with more with the catering and the bookings and stuff like that within railways. So that's what we liked about that stock, and that's what we picked up there. But having said that, in the defense space, we added to only one of the names that we like in the defense space, in the PSU defense space. Basically, it's an electronics manufacturer rather than actually a pure service provider to a specific service of defense. So it's a service agnostic play, and that's what we added to when the stocks failed.
Okay, no, got that. By the way, Dinshaw, any other sort of single stocks that you've added to your portfolio from the last time that we spoke?
So from the portfolio that you've seen in my Feb disclosed portfolio, I don't think we added any new name here. We just, because March was such a choppy month that it was making more sense to add to your existing favorites that you liked rather than dig out new names. We are in the process of doing it, but as of now, we're not added any new names.
You want to share what you're working on? Give us a hint.
I don't think a company who's looking at M&As tells you which company they're targeting as of now. So no, I won't be sharing any names out here.
Let me ask you then. Angel, right? Angel Broking. The stock. Actually, let me ask you about two names. One is Angel, the other is IIFL. The reason I mentioned these is because fast-growing companies, both Angel fell some 35-40% from the highs. IIFL, of course, is halved in value. There is the RBI sort of observations and order there. Again, but growth before all of this was, of course, extremely fast. The NBFC has been doing well across segments. Any thoughts on these two names, Dinshaw?
So I'll tell you, I forget the two names that you mentioned, but the fact is that they both deal with stock markets, right? And we actually like names, which we call as gatekeepers to the wealth that India is going to produce, right? So that's why we like names like a Motilal that we have in our portfolio. We've been studying these two stocks. So we'll be obviously, I won't be commenting on that, but the fall has made it much more exciting for us to look at those names also as such. So I'll leave it here. Prashant, I think I've given you enough hints of what our thought process is on this.
Okay, you already own Motilal, so yeah, that's fine. You already have something in that. By the way, exchanges, Dinshaw, we were talking about that earlier. there's BSE in the commodity side, MCX, and perhaps at some point NSE, but there?
So we have a MCX with us.
Okay.
And obviously, we'll be looking at any new offering which comes by also quite closely as and when it happens.
Okay. Got that. Then, sure, just one sort of quick word on real estate, right? Is it time to start making, is the market starting to make a little bit of differentiation between, say, Mumbai-based players, which are doing very well, Lodha, etc., whereas you look at something like a Sobha, you look at Prestige, these still remain 20-25% lower from where they were a fortnight back. Just your thoughts there.
So, Prashant, actually, we used to own one name in real estate, and we moved out on that name because we felt that the sector was becoming too hot for us to handle, because even on the book value basis, they were looking very expensive as such. Forget about the P's and EV/betas or whatever you want to value them at. And actually, I believe that whatever is happening today, I think there's a lot of fraud built into that sector. If anything, the regional players look much more sober, but mainly these guys are more, I would say, politically connected people. So it's basically better to stay away from those kind of stocks as such. But anyway, we're not too keen as of now on the sector.
Okay, maybe a little too hot. That's the view, but one is starting to hear that. I mean, the first murmurs that maybe it is getting a little too stretched on one side, but we'll see. Then, Shah, it's having you with us here. Thank you very much for joining us for this chat here on CNBC-TV18. Now, let's cut across conversation with Novartis' CEO, Vas Narasimhan. Shirin, over to you.
To the Global Dialogue, I'm Shireen Bhan, and it is my pleasure to welcome back on the program here in Hyderabad, joining us at the Novartis facility. Back on the program, thanks very much for joining us today.
Thank you, Shireen. Always great to see you.
Well, 2023 has been almost different from the healthcare side of the business, which is a different entity altogether. We're talking a listed entity here. What is driving this strategic review? What do you in Novartis AG has in Novartis India?
Well, Shrina, as you outlined, we have two entities here in brands. These are brands that are established brands that we launched sometimes 20 or 25 years ago. We often market these with partners, our recent partnership with Success, and I think we've seen good progress. But the strategic question is, are we the right owner through NHPL, where we house this beautiful site here where you're at, 300 people, as well as all of our future launch medicines. So that's the strategic we're undergoing. No decisions have been taken, and we'll see how it unfolds.
Yes, in your release, you've also said that you'll be able to arrive at a conclusion within the year or not. But would Dr. Reddy's make this? You've already got an exclusive arrangement with Reddy's starting 2022 for almost 1% of sales that Novartis India has. Would it make sense then to do with Reddy's? Are you in talks with them?
I can't comment, obviously, on specific opportunities or companies, but certainly the owner for this business than Novartis. And we'll have to see now what kind of offers we get. Is it better for us to continue to own this listed entity, partner it, or to sell it to another logical buyer? So we'll see how it goes. Too soon to say at the moment.
Has price control been an issue and a challenge in India on the commercial side? Because I'm given to understand that almost 30 are under price control.
Certainly, we think the pricing environment makes sense. However, our strategic thought here is not driven by any specific price. It's really much more in the long run. Are we the logical owner?
The focus on Novartis India, whether it is strategic fit as you look at the future, but you want to continue to double down on healthcare?
Exciting new launches, incredible medicines like our medicine Cosentyx and immunology, bring them to as many people as we can within India. But then also when you think about this Hyderabad center, which we really consider as one of the extensions of our headquarters and major sites in East Hanover, this is now an 8,300 person operation by the end of this year. And I would foresee us to continue to grow at a double-digit rate as we continue to build out capabilities in R&D. Two areas we're now looking to invest into Hyderabad are in research, as well as expanding our U.S. marketing operations as well into India.
Okay, so you're expanding the operations at Genome Valley, which in terms of incremental investments?
Well, if you think about our total dollar investment right now, it translates into around $1.5 billion of investment into the entire ecosystem. So we dollar figure, but I think you could assume that continued steady investment into India through the...
India clearly not part of that for a market list that you have, but from an R&D, is India for your plans going forward?
You know, India has become incredibly strategic. Now, as you know, over the last Novartis, we've done over $100 billion of transactions. We're a pure play medicines company. Our performance last year, 10 positive phase 3 trials. Yeah. Every one of those trials were missions of those trials to global regulators happens through our Hyderabad center. We get some of the best talent in the world here. And it is Hyderabad becoming a talent story, a transformation story, for us to get more and more medicines to patients around the globe.
But not a manufacturing story, which you and I spoke about even during your last visit. So that's
actually not a priority, no. I think technical development, as you mentioned, we have outstanding, which we continue to invest in. That, of course, enables production for further investment really anywhere other than our existing sites.
You know, on the trial, virtually every trial that you're currently in the process of undertaking has been touched. How has that environment changed? How facilitative and enabling?
In India, I believe we're still the #1 operator of clinical trials in the country. And we have seen improvements with DCGI in terms of the speed at which clinical trial applications are being processed. Obviously, we always would want things to go faster, but we see an improving environment in terms of operating our clinical trials here. And India is generally involved in our key global clinical trials. I think the next step, of course, is to continue to encourage the government to invest through the outstanding programs that we have now for the National Health Insurance Program to enable investment into the next innovative medicines. As you know, that's always a struggle given the price between generics and innovative medicines. But I think that's the next opportunity here in India. Then we could grow our Indian operations through the Healthcare Limited from a $200 to $300 million operation, we hope over time, to a much larger business.
So if there was
Okay, well, that is the global CEO at Novartis, Vas Narasimhan, in conversation with my colleague Shireen Bhan. Some of the important points with regards to what they are planning to do with the business here, flashing at the bottom of the screen. We'll get you more as we go along, but we'll take a quick commercial break here as well. I think just about 20 minutes to go for the market closing. We're up 185 points. D Street chatter coming up with Nimish on the other side. Of course, trading ideas with our technical experts as well. Stay with us.
Welcome back. Well, the markets are still holding with close to around a double century of gains, so you like that. The Nifty Bank, well, we're not able to get past that 47,000 odd mark, but still up close to around 400 points. I think the bulls will take that. The only problem, I think, is volumes are still on the lower side, and that's what we have seen for the past two sessions as well. Nimesh is with us. Nimesh, how are you reading today's trading action?
Well, a good recovery in the markets, and the good part is we're holding on to the early morning gains.
Yes.
But Nigel, looks like the large part of this rally is a short covering rally, and largely into the PSU stocks. Look at the PSU index, that's up 3%, and all the top gainers are part of the PSU basket, the OMC PSUs, metal names that you've been tracking. So is the case with the NBFC PSUs as well, the PFC RSs. All are buzzing in trade today. But if you look at the Y2D chart, all these stocks are down anywhere between 20 to 30, 40%, right? So we've seen a bit of a short covering rally in these names today. Having said that, there is a bit of buying as well. In fact, there's going to be MOC basket buying across names is what I understand from a leading FI. So it looks like the FI number could be slightly towards on the positive side. So that's another feedback. Even the broader markets have recovered sharply. But again, if you look at those indices, they were sharply down Y2D. So a bit of a relief rally in the broader markets as well. I will classify this rally as more of a short covering rally, that largely led by the PSUs, but need to see whether this momentum can continue. My sense is starting next week, though it's a truncated week, you might see this momentum, especially in the broader markets, because they're so oversold that you might see a bit of a rally to continue in the broader markets.
Well, portfolios will feel good if that has to continue, Nimesh. But what about individual stocks? What are you picking up?
Okay, so in terms of individual names, the first stock on my list today is Aurobindo Pharma. That's been consolidating in the last few days, but looks like some bit of accumulation is happening. So for the second day running, I understand there is a follow-up buying from some larger FIs into Aurobindo Pharma. So that's the first name. The second name is Lupin. The stock is buzzing in trade today and good volumes as well. And looks like that largely because of some FI interest is back in Lupin as well. So expect high delivery volumes in that particular stock. Coincidentally, the third name is also a pharma name, which is GSK Pharma. That stock has seen a big outperformance in the last few weeks and few months. But now some bit of profit booking seems to be at these levels. So some small sell flows. But I understand there is profit booking clearly at these levels in GSK Pharma. And the last is two large names where I'm expecting large blocks. One is Tata Motors and the other one is Nestle. The indication is there could be sizable blocks in both names. In Tata Motors, there has been a speculation for the last many days that Tata Sons could sell the way they sold in TCS as well. And in Nestle as well, there has been an indication that maybe some larger investors are sounded off and there could be a block in Nestle as well very soon.
Okay, got that, Nimesh. Thanks very much for all the action from the reading rooms today. We do have Mitesh back with us. So let's quickly, glance back at the screen. Look at the mid-cap rally now. The gain on the mid-cap index is now 2.5%. So it's really holding on to most of it. In fact, building on some of the momentum that we saw earlier in the day. So pretty much the highest point of the day for the mid-cap index. Mitesh, so any fresh ideas coming up? It's been a good day for the broader market.
Yeah. It's been a very good day, in fact, and towards the end, we have again tried to move up, which I would take it as a positive. On the stock side, I have two BTST calls. SRF is something, which is near the day's high. BTST here with the stop at 2519 for targets of 2575. And Zydus Life is the other one, which I would suggest BTST with a stop just below levels of 984 for targets of 1000.
Okay, Mitesh, thanks very much for that. So that's the overall picture right now. Prakash Devan is with us, joining in to take some questions. Prakash, good afternoon. I mean, it's a smart, solid recovery. Large caps are doing well, but mid and small caps even better today.
Oh, absolutely. I think, this has come as a welcome change from what the screen looked like, Prashant, the last few days. And what's interesting is, and I would just go to repeat a bit of what Nimesh also alluded to, that the sentiment that's changed is towards the pocket that was the most hurt, and that's the PSUs. And if that were to kind of, have a slightly better rub-off on some of the other segments or pockets of the market, you'll probably see some genuine buying that will probably come through as a follow-through tomorrow as well. Interestingly, the names that haven't had this stratospheric kind of a rise in P multiples, they are the ones where, actually the buying is coming back more seriously. So good businesses start getting available at reasonable valuations, and you'll not be kind of very surprised with that explanation that, money is coming or being chased into these names. So that should continue. And I would expect this to be a bit more broad-based going forward. Also, of course, we had global cues which are positive and all of that to back this up. But people committing money into pockets where there is still salience that's very evident is the theme that I take away from today's rally towards this change that's happening.
Okay, all right. Noted that, Prakash. Well, we need to take a short break, but before that, I just want to update our viewers on NMDC. NMDC has gone ahead and cut prices. It was widely anticipated. They've cut it by around 200 to around 250 rupees per share. Now, this is the first cut that we've seen from NMDC all the way since August 2023. The key reasons were global iron ore prices corrected by 25%. You had an auction that took place, the OMC auction that took place here in India. And out there as well, demand was fairly tepid and pricing as well was lower. And iron ore exports on a sequential basis, that's what we saw in February in comparison to January, well, it was sharply lower by around 13 to around 15%. So those are the key reasons why the street was anticipating a price cut, and that's come about. Citi, earlier today, they had gone ahead and they had cut its target price. They maintain a sell call out there with the target price at around 180 rupees. Now, they cite that global iron ore prices have corrected, but NMDC was yet to cut, which they have done right now. And they're saying at the start of today, the domestic iron ore prices were at a 25% premium in comparison to export parity pricing. And hence, they see that there is pressure or likely to be pressure on domestic iron ore pricing. They're also saying that steel prices are weak, so it's giving limited support to iron ore prices. They've also given a matrix saying for every 100 rupees per ton price cut that we'll see, the EBITDA gets hit by close to around 4% and the fair value gets hit by around 8 rupees per share. They go on to add that valuation-wise as well, they believe that NMDC is not very, very cheap. So put all this together, we had the price cut and we have the Citi note on NMDC. For the time being, slip into a short break, come back, more market talk lined up.
Welcome back. Looks like it's going to be a close above 22,000 on the Nifty. Not quite at the day's high, which is 22,081. But the positive global sentiment is rubbed off. Just to quickly recap how Asia did this morning, you had Kospi up 2.4%, the Taiwanese markets up 2.1%, Nikkei rallied close to about 2%. So across the board in Asia, the screen was very much green, and that helped the markets here. Prakash, afternoon, and thanks so much for joining in. Any thoughts on IRB infrastructure and this, secondary transaction which has taken place on that private InvIT? Vivek has been talking about it. The stock is up 9.5%.
Good afternoon, Dimya. So, I mean, quite understandable given the fact that one of the things that was throttling the growth of this company was, the lack of liquidity. I mean, there's no way companies like these can just rest on their laurels in terms of the assets that they've created and not be able to monetize this to be able to participate in what's now seeming to be a very promising emerging growth segment. So, and they have the wherewithal, they have the ability, but, they, of course, would need a balance sheet that can support all this kind of a growth. So this is something which was in the making, was expected, has been delivered, and that's why the market is kind of celebrating that particular move. But beyond this, it will rely a lot, you'll have to rely a lot on execution and the kind of pipeline that they build. Remember one thing, some of the biggest names in this space, in the infrastructure space, have actually been getting out of road assets as well. The Welspun Group, for example, you've had this in the past with the GMR Group for different reasons compelling them to do it. So the pipeline is going to be very important because it's very specific to the routes, to the assets, to the projects that they take up. So I would not buy into it just because of this. If you had to buy in anticipation, you would have probably made some money. But then that's probably an opportunity gone. Going forward, you'll have to wait for the pipeline build up to tell you how they're going to put money to use and then evaluate whether the stock makes for a worthy presence in the portfolio.
Okay, got that. Lots of names, by the way, on the mid-cap screen as we're heading towards the close. CG Power, BHEL, Polycab is up about 6% as well. Prakash, so just quickly, considering that there's a revival of sentiment of sorts in the mid-cap market, thoughts on any of these names? Polycab also, I mean, it's been sort of beaten down quite a bit. Would you look at it now?
Good afternoon, Sylvie. So, yeah, it's a day where the backbenchers have been pulled up and given a chance to perform. But these are days where the market, by sheer strength of rotation, looks at stocks that are down and out, but not necessarily which hold a lot of promise, because there's nothing that's changed between yesterday and today to suddenly get Polycab to be, looking so promising. It's just market rotation where the money is flowing. But that segment is something which I keep on saying is very promising. You could look at the other names because all of them will now learn from the experience that Polycab has gone through and make sure that, the numbers that you expect in March end will be fairly promising. And then, of course, that will likely to continue as well. So the revenue growth is going to be fairly decent. For some of the other names, it's probably not priced in completely. So there could be some upside from a tactical position perspective. But fundamentally, of course, all of them are priced fully given where they stand in terms of the growth cycle for the wires and cables business.
No, got that. Prakash, you want to leave us with a pick? Something interesting to wrap up?
I had spoken about the day where this PLI was being discussed. I think it was Monday, if I'm not mistaken. We spoke about some of the ancillaries doing well rather than worry about which OEMs would not do well. And we spoke about Sona BLW. I mean, because they've proven themselves to be very critical suppliers to the likes of Tesla and some of the other names in Europe, particularly, who have high-end cars that are being used. And you see, market would recognize that as things happen. But of course, nothing's going to happen overnight. But I would still look at some of these promising ancillaries in the auto space, given the auto segment is revving up in a very different way, be it Maruti, be it Bajaj Auto on the two-wheeler side, be it Eicher. So that's the pocket would kind of, I think, allocation. It's under-allocated in most portfolios. You could look at Sona, you could look at Suprajit, but some of them are really looking very smart in terms of opportunities.
Absolutely. I remember that. Prakash, thanks very much for that. Sona, of course, is up 6% today. It's doing very well, 680 on that one. I think we're going to wrap up things here. 176 points up on the Nifty is what we have. So ending with pretty much what we started with. So let me just tell you what the open was. The open today was 21,990. So you're basically ending about 30 points above where we started the day. The high today has been 22,123. So off the highs, but about 100 points off the highs, I think. The high has been 22,080, beg your pardon. So about 60 points off the high. So that's not such a bad outcome. But and the open today was 21,989. Yeah, I mean 20-25 points above where the opening level was. I was looking at the weekly chart. And you got the bank nifty, which will end where? The Nifty Bank will end about 0.8% higher. That's about 370 points, but 2% gains in the mid and small cap part of the market make it really a broader market session to watch.
A good advance decline ratio on our hands. So nearly 1,900 stocks advancing for about 400 stocks declining. And the sectoral indices which did well, so PSU, so the Nifty PSC index was up 3.5%. The global optimism lifted the metals. The Nifty Metal Index was up 2.5%, and PSU banks too rallied close to about 2%. No sector ending in the red today.
Yeah, very, very positive looking screen, and the mid-cap index closing at the highs of the session. Talking about PSUs, I mean, look at the rally out here. PFC 7%, REC 6%, NALCO 6%, NBCC 5%. Just a long, long list of winners out there. But it's not just PSUs. It wasn't a very narrow broad market move. I've got other names for you. IRB 9%, NCC 8%, something like a Ujjivan Small Finance Bank 5% on the higher side. You've got a CG Power rallying all the way up to 9%. L&T Finance 5%. So very diverse. Chola Finance 5%. Very, very diverse. And a lot of these are large mid-cap stocks. These are stocks in which people do have a lot of positions, trading positions. Many of them are F&O stocks. So it's telling you that the mid-cap market was very vibrant and it wasn't a very narrow PSU-driven move alone. So I think the bulls will be pretty happy with the recovery that we've seen in the broader market so far this week.
Okay, with that, we're going to take your leave and closing bell from the entire team. Thank you for watching. Stay tuned. Markets Forward comes up next.